Palantir stock is up over 140% this year, but the real question is, what do you do right now? Instead of buying more at these highs, I'll show you a strategy using leaps that can maximize your returns without putting all your capital at risk. I'm diving into leaps, and we're going to be going over Palantir on my screen with some real examples. And real quick, I want to point out that I'm up $101,000 on Palantir. Officially 6 figures. I've had this position many times. This is a new 6 figures that I've made in my portfolio. And that's the reason my portfolio is going to $4 million, guys. So I hope you're subscribed because I'm making you a ton of money. So I'm going to be diving into leaps, options, and why this strategy is perfect for investors who want to control, really have that control for more shares of Palantir. I'm sorry if I'm being goofy. For more shares of Palantir for a fraction of the cost. It's a very simple strategy. I want to hook you up with this strategy. If you've been watching Palantir, you know they're making big moves in the AI and government contracts. I'm excited because I've said this for many, many times, so I'm just saying it again. In this video, I'll show you how to use leaps to maximize your gains on Palantir. We've already made a lot of gains, but I want to make you more gains. So let's cover the basics real quick, okay? Leaps stand for long-term equity anticipation securities, just fancy way for saying it's a long-term option. And they're simply long-dated option contracts that give you the right to buy a stock at a set price. Oftentimes they're 2 years, they're 1 year. I consider a leap option anywhere around the 9-month mark, okay? So it's like having a baby. So by buying leaps instead of the stock itself, you can control 100 shares for a fraction of the cost. This is a fantastic way for investors, especially with smaller accounts, to gain exposure to the stock that's high quality, like Palantir, without having to put up all their hard-earned money. Keep that money for yourself a little bit and use less upfront to get your desired returns, all right? So let me show you a real-life example right now using Palantir, all right? So the stock's at $41.78. Wow, my screen just changed because it's 7 a.m. All right, well, so what we're going to do is, first of all, my average cost is $21.94. This stock is parabolic, which makes me a little bit nervous because the higher it gets, the riskier it becomes. I know you might not look at it that way, but actually it's the inverse of what most people think. When a stock goes down, it's becoming safer. All right. That's why when it was going down and nobody was listening to me, I was making videos on Palantir at $16 per share. No one listened to me. Henry's crazy. No, guys. No, just sometimes you need some time. You need some patience. I gave it some time. I had some patience. I put the 6 figs in the account. All right, anyone can do this. How would I go about it, right? So just go to Palantir Trade Options. Now this is gonna be important because I'm gonna turn this leap option and I'm gonna show you guys how to sell calls on the leap option. It is important because it subsidizes your cost and makes it a little bit cheaper. So when you're basically buying a call option, it can be expensive. So if I buy a leap option here, let's say that I wanna go out to September. All right, let's go to September 19, 2025. And let's go for an in the money option. So let's go for something like 35. Delta right here is going to be 0.78, which is perfect. Perfect. Okay, so if I go for 35, so if I buy the 35, it is $15, which is, it is a discount. It says 15.5. Robinhood says 12.70, which makes no sense. I guess it's pre-market, but you're actually going to get filled for somewhere in between the bid and ask price. So you know, call it $14.50, or the mark is 470, so about 1470, right? The volume here is pretty good. Actually, it's 500. The implied volatility here is actually even higher than NVIDIA. So that's some good volatility right there. That's some really good volatility. That's high volatility, which is a good thing for option sellers, but it's not a good thing for option buyers. It makes the option more expensive. All right. So the option right here is going for $15, pretty expensive, but hey, it's better than buying 100 shares of Palantir for $41.76, because $41.76 would be $4,176, whereas you can buy the call option for $1,500. Okay. But here's how you would reduce the cost. Okay. So, and by the way, I just want to say, you know, if you're thinking to yourself, well, why should you invest in Palantir? It is an all-time high. The reason why I've been covering the stock for a really long time is because of the quality of the company. So why would you want to invest in Palantir long-term? Well, Palantir is becoming a dominant player in AI and data analytics, especially in the government and the military contract part of their business, okay? They're working with top global organizations from the US government to private enterprises, helping them harness the power of data. I have a data analytics degree, guys. I have finance, economics, and and business analytics / data analytics. It's like kind of it's the same thing essentially. And as the world becomes more reliant on AI and data-driven decision making, which I am 100%, I've been 100%, I have a degree in it because I knew that it was going to be the future. So I was basically, this is so funny, I knew that data is going to be the new oil. Like there's a lot of research articles, and because when I went to college, you know, there was like Harvard Business Review and they were talking about how important data is. So I decided at the time, I didn't know exactly what I wanted to do. I knew I wanted to work on Wall Street, which I'm not doing because I realized it's kind of like kind of scam. It's kind of a scam. You know, all the financial advising industry and all that Wall Street stuff. Let me get back to the topic here. Palantir is positioned to basically benefit immensely. And when I look at the data that they're taking advantage of and they're implementing for large organizations, governments, that's where the money is, because data helps you make better decisions. And there's a lot of slippage costs when it comes to companies trying to make decisions. So make a better decision, make more money. How do you make more money? Have more data. So having data is really important. That's what Palantir does. And once they come into a company, they establish their software, they're very, very sticky. All right. Stickiness is something that some of the smartest consultants will talk about. Stickiness. All right. Stickiness of a business. So a lot of businesses have recurring revenue models, right? And when you look at Palantir, when they have a government contract that's 100 million, that's not it, baby. They're going to make more. They're going to make more, which is awesome. But they come in for 100 mil for 5 years. And guess what? After 5 years, you think that company's going to leave? No, they're not going anywhere because they've already spent 100 mil. They're already invested. All right. It's like, yeah. I had some funny jokes, but let me be serious here. They're not going anywhere, right? So when you're using Leaps, you can capitalize on this future growth with less capital upfront while leveraging the long-term potential. All right, so what's also exciting is Palantir's expansion beyond just government contracts. They're breaking into commercial enterprises as well with their Foundry platform. They're helping big companies use AI to optimize operations, supply chains, and even healthcare. You know why this company's successful? Because the CEO went to my high school. The Alex Corp actually went to my high school. That's how I heard about this company. I had several of my like classmates from high school. I was like, dude, this company's becoming big. The CEO, he's class of whatever. It was like 222 or 225 or whatever. Because we had my high school is actually one of the oldest high schools, Central High School in Philadelphia. One of the oldest, most diverse high schools. Okay. Very good high school. So this mix of government and the commercial contracts makes Palantir a global player in the AI. Obviously the CEO I like a lot. And by holding Leaps, you actually get to benefit from the developments in the stock's rise without having to put up all the capital. So let's discuss how this works in managing the Leap and how to go about reducing the cost of the Leap option. So look, I mean, when you're buying a Leap option, it's cool. You can just hold on to the Leap option until expiration and just kind of see what happens. But, you know, if you're going to be using a smaller account strategy that gives you more leverage, you might as well utilize it to its maximum potential. So what I would do is I would pick another option here. Let's go for January 17, 2025. And I'm going to sell a call option against this position. So I'm bullish on Palantir, but in the short term, it's squeezed out so much returns. I'm not sure if we're going to go that much higher. Let's say we might go to 45. Boom. I would sell the 45. Now this looks very similar to a covered call, except you're putting up very small amounts of money. Putting up less money is obviously advantageous. It's like real estate, guys. Do you want to buy your house in cash, or do you want to take a loan and get a mortgage? All right. I have enough money to buy a house, but I would probably still put down 20% on a house and pay off the rest later. And I don't know, because I don't own a house. I rent everywhere I go. I rent everything. I rent my cars. I rent the studio. I rent everything because it's more simple. I don't like the complications. And that's also why I prefer safe passive income, because as long as I have that income coming in, I can rent other things in my life. So I don't have to, you know, it's much more simple. And when it comes to owning Palantir and having less upfront capital in it, I would recommend doing a poor man's covered call. So this is what the Leap is. It's selling calls on Leaps, which we call poor man's covered call. It's because you can be a poor man and run this strategy without having to have 100 shares. There's no need to have 100 shares when you have a deep in the money call option, right? This 35 call option functions as a deep in the money call option. And because it's in the money by a good amount, has a high delta, it's basically essentially like stock. So you can sell call options on the stock and essentially collect income, which is really high income. You're collecting $350 on $12. That's a high income. All right. So let me tell you, here are some of the key scenarios for when it might make sense to close your Leap option. Okay. Because there's different scenarios that can happen. So let me go over the different scenarios, right? So you know how to manage the strategy. Number one is there might be a significant price increase in the underlying stock. So if Palantir goes up, all right. So when or if the underlying stock goes up, or if and when Palantir experiences a significant price increase and the value of your LEAPS option has risen substantially, you might consider closing the position to lock in profits. Nothing wrong with that at all. So why would you do this? Well, LEAPS are long dated options, but if the stock has made a big upward move, you may have already captured a large portion of the potential gains, right? You might have made a quick short-term gain, and in that case, you can close out this option. So let me give you an example here. Basically, if you bought a LEAP call option on Palantir at a strike of, it could be 35, it could be 30, and the stock price goes from 40 to 45, the value of your LEAPS will increase significantly, and you could sell to realize those profits without having to wait until expiration. Especially in the beginning days, there's very low theta or time decay on a LEAP option, so you're not losing any value, and it's going up huge in value. So before the time decay really kicks in, take the profit. Nothing wrong with taking profits, right? So look, even though there's more time left on the option, capturing a 25% move in the stock price in a relatively short period of time is often a very good opportunity to lock in gains. By taking profits early, you're removing the risk of a market pullback, and you could erase your gains. So it's kind of like a double-edged sword. You can hold for more gains, or you can just take your profits. Now, listen closely. I'm saying this because I made so much money on Palantir, and as it approaches 50 and it becomes more expensive, I'm more cautious. I felt that in my chest. I'm more cautious because this is my best opportunity where I made not just 100K for myself, I made like millions for others. But now it's getting more expensive as it approaches 50 and it becomes more expensive. I'm more cautious. So I'm recommending to take profits as you go on Palantir, as you see fit, as your LEAP options experience results, as your stocks increase in value. I think you should be taking profits and kind of see how it goes. All right. Nothing crazy. Many investors understand that a 25% rise in a short period of time offers a solid return, and locking in profits can be very smart and practical move, but it's also good for risk management if you have a large position on the stock and the LEAP option is up a lot. It can be really good risk management because look, it's actually crazy because in this portfolio, Palantir was 6%. Now it's approaching 7%. So when stocks rise, they grow and they become a larger portion of your portfolio. So if a stock doubles, it may no longer be the best risk management play in your portfolio. You may need to reduce exposure. Reducing exposure means reducing risk. All right. So now, since I love educating, I'm going to teach you some very valuable management and rolling techniques. If you want to see me do them live on Discord and have a multiple 5 or 6 figure portfolio yourself, you can apply to be a student and get coaching from me and see all of my trades. I do a lot of coaching Mondays and Wednesdays, and I have 10 to 15 trades a week. All right. Well, with that being out of the way, let's discuss time decay and LEAPS and how to manage them. Okay. So here's how theta works in your favor. All right, here's an overview of how to manage a LEAP option, starting off with theta. Okay, theta is time decay. All right, if I expand this option right here, you will see that the theta is 0.0252. Theta is one of the most critical factors when trading options, especially when holding them for long periods of time. However, the LEAPS strategy, time decay, works much more slowly compared to short-term options. I typically sell options because theta kicks in very fast in the last 30 days, and that's how I make income, and that's how I make that safe, passive, consistent income that is my whole focus of this brand, of my YouTube channel, of my coaching. I focus on making $10,000, $15,000 a month for a lot of medical professionals, a lot of doctors, dentists, and engineers, because you guys have income and, work is hard. I see a lot of people working really hard, and I see a lot of issues in the workplace. For example, people get older and it's harder to find a job. You need a plan B, or you need a second source of income. That's obvious. It's obvious, right? We can't rely on other people. We can't rely on the government. We got to rely on ourselves. So that's why option trading is so important, because it is the best vehicle for creating passive income on the side without putting in too much work and with low risk. It's the best investment vehicle that I found that I continue to use to this day over and over. Okay. I've been at it, about to be 30, and I pray to God that I'll still be at this, and I'll be thankful if I'm still doing this when I'm 50, 60, 70, 80. God bless, I have the health to keep trading options and to keep living, keep giving, keep teaching you guys. I take faith seriously. I take coaching very seriously because I'm looking to help people. This is what I find purpose in. I don't know what else I would do all day. All right. I really, really enjoy it. So I think when it comes to creating passive safe income, you need to look for companies that have innovation. Okay. So this can give investors more time for the underlying stock to actually play out. That's why I do like LEAPS a lot, because it gives you time. All right. Time is money, but time is also opportunity. Time is opportunity, guys. Don't let it slip away. All right. Don't let it slip away, because with time, you should be using it wisely so you get your desired outcome. You know, if you want to get richer, it requires time, it requires patience, it requires the right strategy, it requires the right mindset. So when I look at Palantir as a company, when I look at the options, all right, I don't want to see rapidly declining options when I'm buying them, especially when you're buying them, guys, because when you're buying options short term out of the money, number one way to lose money, right? So why does it matter? Why is it so good that these options decay slower? Well, slower decay on leaps generally have expiration dates that are 1 or 2 years or 9 months out. That means that that data decay is minimal during the first half of the option's life, or even the 2/3 of its life, okay? This gives you more time to benefit from the movement in the underlying stock without constantly fighting the erosion of value, okay? Options are eroding in value every single day by the amount of theta, okay? So you see the theta on the screen right there. So look, when it comes to confidence and long-term plays, if you're investing in companies like Palantir with a bullish long-term outlook due to their growing dominance in AI or government contracts, or whatever the reason is that you're investing in Palantir, there's many reasons for it. Holding leaps allows you to participate in potential upside without worrying about short-term volatility or about, fast time decay, which hurts an option buyer. It also gives you greater flexibility. You can hold onto your leaps without feeling pressure to sell them within a week or a month. You actually give yourself opportunity for a scenario to play out. And this is very unlike short-term options where theta ramps up as expiration approaches. So this means that you can better weather temporary dips in the stock price. And, let me just give you an example. Let's say that you bought a leap call option on Palantir with a strike price of 30 and the stock is currently at 40 or 41.72. Since leaps are long dated, the option's value is less impacted by time decay in the near future. All right. So it's not really going to be affected. Even if the stock trades sideways for 2, 3 months, it's fine. Even if the stock trades sideways for a few months, you won't really lose as much value in your option as you would with a short-term option. Okay. So let me give you some actionable tips. Okay. It's all about action. That's how you make money, is you take action. Take advantage of leaps to ride out the long-term trends, especially in stocks with high growth potential like Palantir. Use slower theta decay to your advantage, allowing more time for your investment thesis to unfold. Now, let's discuss rolling leaps for extended profit potential. Okay, this is a little bit more advanced, but I believe in you. If you're subscribed to this channel, you are going to be intermediate or advanced in no time. Okay, let's talk about rolling. Rolling is a very important topic that can help you make more money. It can help you fix a position. And here's the overview. Rolling options is a strategy where you close an existing option position and you simultaneously open a new one with later expiration or a different strike price. Okay, so you can manipulate those two things. You can manipulate time and strike price, which is money. Isn't that awesome? You get to manipulate time and money. You get to be manipulative sometimes. Let's go. Let's make that money. Why not? I'm joking here. I'm trying to make a joke. I'm not that funny. When you can manipulate and control time and money, what else? What else do you need? You need, obviously health and good relationships, but time and money, those are two very important things. We all wake up in the morning. Well, I don't wake up in the morning thinking about it, but most people wake up in the morning. How do I not go to work? Or my day is so busy. Well, what if you didn't have to work? What if $10,000 to $15,000 was coming into your account every single month? Probably would have a lot more freedom, time freedom, location freedom, etc. So when it comes to leaps, the technique allows you to extend the life of your trade to make consistent income, to have a high leverage factor, which is probably why you're trading options to begin with. You probably got into it because I'm so curious. Leave a comment down below. How did you get into options or what made you interested in it? But I think that a lot of people got interested in it because there's obviously a lot of money to be made, clearly, but it also has a high leverage factor, which means that you can put a little money and make a lot of money. That's probably why a lot of people get excited about options. And how funny it is that you watch a channel that is not about that. I'm all about the safe passive income approach, which is very interesting because it's kind of, a lot of people think options are super risky. Well, the way I trade them, it's super safe, super safe. All right. In my coaching, I always tell people we'd rather make $500 a week, $2,000 a week than 50 grand one month and then down 15K the next. Okay. It's not how I like to go about it. I like that really steady approach, the stability of it. So when it comes to leaps, you can extend the life of the option trade by rolling it. Okay, you can take it from, let me see if I have any, let me look through my portfolio. Let's go through a live example. So I have Nvidia, I have Walmart. All right, Walmart, you know what? Walmart could be a good one. Actually, Walmart is a really good example. This is a boring, safe trade that I made where I made a ton of money. All right, made $166,000, and I'm up on the options themselves. Okay, Walmart was 81, and sorry, my covered call is 81. You can see how Walmart actually broke through my covered call strike, but I didn't panic. I stayed calm. Now we're below. But look, here's how you would roll. All right, pretend I got a poor man's covered call. I have a regular covered call here, but I have shares. But this works the same if you have the long call option. It's the same thing as shares. So let's pretend that I want to roll this 81 covered call. All right. Now it's profitable, but just a couple days ago it was not profitable. It was losing money. So if I go to the 1 week return here, I'm not sure if it did load. So you can see how this option was going for 85 cents. Okay, that was kind of a lot. I was down on the position. Now it's fallen down because Walmart is out of the money, and this option is approaching expiration tomorrow. So it's going to expire most likely out of the money. But if I was nervous, I could just click roll this position, or if it was in the money right now, I can click roll this position, and I can completely change and manipulate the expiration dates. I can go from October to December, and I can go from 81 to 85. This right here makes it that my 81 goes to 85, and my premium goes from 19 cents to 154. So I would actually collect a total credit of $8,100. Now this is a little bit bigger of a position. That's why I'm able to roll it for so much money. But on a small scale, you can simply change the expiration date. You can simply change the strike price. Not always get paid a credit, but it's always going to make sense because time is money, and options that are further out in time will always be an advantage to roll and adjust. Always. Because of the extra time, the option will be, if it's the same strike, it's always going to be more money. Always, 100% of the time, I can bet you anything that you want that if there's more time, it's the same strike, same stock. An 81 call expiring in 7 days will be worth less than an 81 call expiring in 2 months. Okay, because of that time factor. More time means more money. Okay, but also you can give up that time for the money. All right, so same strike, you're always going to get paid more, but that means that you can go up in the strike $1, $2, $3, and most likely in many cases you can roll up and adjust the position by a few dollars without any penalties at all. You can adjust it by a couple of dollars and get paid a credit, and you can also adjust it by $10 or more. You will have to pay a debit. But hey, I love paying $1 to make $5. I love that. I don't mind paying a debit. I don't mind spending dollars for $5 bills. Do that all day. All right. So let's talk about why this matters and how the best practices. All right. So capturing additional upside is really why this matters. All right. You want to capture additional upside. If you're still confident in the long-term prospects of a stock like Palantir, then buy your leaps and then just hold. As they approach expiration, you can roll the option to a future date, allowing more time for the stock to rise, or you can just kind of manipulate that strike price to collect more income. So the rolling is what I do on my Friday calls and my Discord. I give updates on any positions that I'm adjusting or rolling. It's really, really important. It is the first link in the description. If you are interested, go ahead and check it out. Locking in your gains. If your leaps have already appreciated significantly, rolling them to a higher strike price can lock in profits while still allowing you to benefit from further gains. All right. It's also really important to manage risk. If the stock has been volatile or hasn't moved as much as you expected, rolling your leaps gives you more time for your trade to work out without having to sell or lose your position prematurely. All right. So another quick example is, imagine your leaps on Palantir at $30 strike price with an expiration date of 2 years from now. Okay, that's really long. The stock has appreciated to $50, and now your leaps have gained significant value. All right, you can just simply roll out your position by your current leaps and buying new leaps with a higher strike price, such as 40. You can completely just take profit and then open up a new leap that has, at a higher strike price. So you get capturing a large profit, and then you reinvest some of the money into buying a new leap option, and then you keep some of the gains as well. So that's also a really important strategy. And if your leaps are nearing expiration, but you believe the stock still has room to grow, then just consider rolling your position to a later expiration to maintain exposure to the stock's future upside. Again, I'm usually not holding leaps until expiration. I'm typically cutting them for a profit, because why not? Taking profits somewhere in the 1/4 or the halfway mark, if you made a significant gain, makes a lot of sense to me. So rolling is an excellent strategy for managing positions with high potential, long-term in a long-term stock play like Palantir. So when to consider selling covered calls on your leaps, this is also very important because obviously I showed you guys an example of selling call options on a leap. So the overview is basically selling covered calls is a great strategy to generate additional income. That's obvious, right? I cover that all the time on my channel, but it's especially good in a sideways or slightly bullish market. Okay. If the stock's moving sideways, it's fantastic to collect income. If it's moving upwards, it's still pretty good. Okay. So when paired with leaps, this technique of selling call options becomes even more attractive because you have the benefit of holding a long-term bullish position while collecting premium from short-term options. So you get that short-term income coming in, which subsidizes the long leap option and also gives you income, which is, why you're watching my videos. You want income. And that's what my life's about. I like making income and traveling and enjoying life, different cuisines, different cultures, and going around the world. When it comes to income generation, by selling covered calls against your leaps, you can collect premium on a consistent basis while holding on to your leaps. This income helps offset the cost of the leap or increases your overall return. It also reduces risk. Selling covered calls helps you to mitigate some of the risk of owning leaps by providing regular income. If the stock doesn't move as expected or trade sideways, well, you still got income because of the leap option that you sold. Okay. So it also helps you capture short-term moves. If the stock rises slightly, but not really that much, well, you're making income, subsidizing your cost of your leap. And it's much better to have something coming in versus basically nothing and just waiting and waiting. I'd rather have something coming in, right? That's why I like covered calls. And I was working, on Wall Street, and basically all the clients want income. It makes logical sense. Why wouldn't you want income? An NBA financial advisor that went to my college, I was talking to, and that's the only strategy that he uses. He uses more covered calls because he's working with NBA players that have money. But if you have a smaller portfolio, or even if you have a bigger portfolio, the poor man's covered call strategy or leap strategy on a high quality company like Palantir and selling calls against it makes a lot of sense for me. If you want to see how I sell calls on leaps, leave me your email. Use my free email newsletter in the description. I will send you personally a video on selling calls on leaps and a PDF that I just made recently.